So apparently I have to rethink everything that I thought about trading and investing in 2022 because I'm sitting there thinking to myself, is it even possible for Netflix to drop another 20% on earnings? I'm like, probably not. I mean, I'm not going to trade it, but if Netflix craters again, the markets are going to crater, and they already did last time. What's the odds of that happening back to back? Not very likely. Well, what happened? Netflix is down 26%. It's almost comical that it happened back to back, almost in the same exact way. Now, Netflix earnings were terrible, but forget Netflix. I don't invest in Netflix. Not a fan, and obviously the company is pretty much dying right now. And we're watching that here in 2022. But what is more important is what Netflix earnings do for the stock market. And let me tell you right now, it's not pretty. Not pretty at all. Look at after hours, down 0.45%. But take a look at last time Netflix reported earnings. That was on January 20th. What happened to the stock? Obviously, down 21.79%. What happened to the S&P 500? Solely based off of these earnings. Well, the markets were down 1.11%. Not terrible. Next day, the markets were down 2%. The following day after that was that record day where the markets gapped down and we were down like 4.5% on the NASDAQ. People thought that we were going to get a circuit breaker. And then we recovered and went positive 0.5%. Historical move. It was like a 5% round trip move in the markets. Now, if that's the case again, just get ready, ladies and gentlemen. You're going to have an opportunity to buy the dip again if you were not able to down here. It's not looking so pretty. I don't know exactly what is going to happen, but it looks like Netflix is repeating itself. And it looks like the markets will likely repeat themselves as well. So shout out to Netflix, the only company that can butcher earnings back to back. It's absolutely incredible the kind of fashion that they destroy earnings. At least at least do an Apple or pull an Apple and don't guide. But they actually guided for 2 million less subscribers. So there's like absolutely no chance, in my personal opinion, that Netflix will come back to this. But ladies and gentlemen, it's time for a Sofi stock update. And we have a lot to talk about. There's a lot of moving parts here in this video. And it's going to be very informational, if not educational. Hit the like button and subscribe to the channel. Let's get this channel to 1,000 subscribers. Let's get the video to 100 likes. Thank you guys for tuning in. Love and appreciate every single one of you guys for sharing this good old moment with me. You are living through history. But nonetheless, let's keep this in mind. No matter if you made money or lost money on Netflix, do you have hustle, motivation, belief, discipline, focus, flexibility, failure, risk, persistence, and patience? Hopefully you guys do. If not, you're going to get some of that here in this video. Let's get into it. So obviously Netflix, very bad earnings. Like it doesn't get worse. And this is a stock that a lot of hedge funds, institutional investors own. So it does not get worse than this. Back to back over 20% declines. I believe this is historical. I don't believe in recent history we have seen this with a large tech stock. And, what's going to happen to the markets? You're likely going to be down 1 to 2% tomorrow. That's likely going to be a given. So we got that. Now, what's going to happen with Sofi stock? Well, it's going to follow the markets. And it wouldn't surprise me if it's down more than 1 to 2%. It's down 1.21% here in after hours. It was up 4% today, so we're still net positive after we did hit that new all-time low yesterday at $6.97 per share. We started to get a little bit of a bounce here in the markets. Now, why did we get a bounce here in the markets? Well, we had Fed Bostic and Fed Evans. This spoke earlier in the day today, and they didn't say anything too crazy. They basically met our expectations. And whenever the Fed does not shock us, that's going to be a bullish thing for the markets. Now, at the same time, you have oil that is down over 5% today. Natural gas down 7.21%. And that is going to be a very good thing because there is a historical connection between the price of oil and a recession. The higher oil goes, the more likely you are to go into a recession. So that's obviously a good thing. When oil is down 5%, natural gas up 7%, to see the markets up over 1%, not a huge shocker there. Now, at the same time, we have the Fed later on this week. We've talked about this many times here on this channel, but on Thursday you have Fed Jerome Powell, and he's going to give us that confirmation of a 0.5% rate hike and let us know what the plan is revolving around the balance sheet. And that's going to be key because that's really the only two things the markets care about is the Fed balance sheet and the possibility for a recession. So it was kind of like, hey, we're going to buy the dip on stocks for the next 2 days. Maybe get a little sell off into Powell, and then, based on what Powell says, we'll either sell those stocks or we will buy more. That's kind of what you were seeing. Buy the dip before the bad news, or potentially before the bad news. And it was widely expected from data analytics companies that Netflix was likely to add about 4 million subscribers. There was preliminary data that suggested that. Now to come in with a loss of 200,000 subscribers, that is terrible. And that is showing a lot of weakness for Netflix, but it could be weakness for the consumer as well. And we already went over the direct correlation between the markets and Netflix as far as last earnings. So I imagine it's going to be very, very bad this time around as well. And we actually dropped, like I said, like 9% from the time Netflix reported its earnings down to the low that we've seen right here. It was not pretty. So I kind of expect that to happen yet again. But Fed Jerome Powell, he could say something that really does help the markets, or he could say something that hurts the markets. We'll have to wait and see. Your guess is as good as mine as far as that is concerned. And that's really it as far as the big catalysts. Earnings, the other two earnings are going to be Tesla, and that is on Wednesday, and this is not a good start for earnings season. And you are going to have Snapchat on Thursday. Those are going to be the two big earnings that can move big and that the markets kind of care about enough to move the markets. Like Netflix dropped 26%, dropped the markets 0.5% after hours. It's not going to surprise me to see the markets down dramatically tomorrow. So they will affect the broad markets, especially Netflix and Tesla. So that's a key right there. That's really what happened today. What is going on? The Fed rate monitor tool still has the next 1, 2, 3, 4, 5, 6 Fed meetings at about that 0.5% rate hike per meeting. That would bring the rates to about 3.25% by the end of the year. So depending on what Powell says, that's going to confirm what the markets already know. Maybe give the markets something to freak out about, or maybe it could be slightly positive. Bostic today, when he spoke with Sarah from CNBC, he basically said like there is a chance of a recession and we are seeing consumers slowing down. There's no need to push the envelope too far and raise too much and too fast and force us into a recession. So we'll wait and see exactly what happens with that. Now, as far as SoFi and the Ortex data, obviously lots of shorting activity. And that kind of goes without saying these days. Borrowed shares of 7.74 million. Return shares of 5.05 million on the day. Cost to borrow max of 4.35%. Utilization of 100%. The short interest of free float 19.88%. Current shares that are sold short 143.62 million. So definitely a lot of shorting activity. Until there is a reason to let go of those shorts and to actually cover, you're not going to see it happening, especially as companies do just butcher earnings over and over again. Like I'm still surprised, like genuinely surprised with what I'm seeing. And I've been invested in the markets for almost 5 years now, so I don't get too surprised on earnings. I've watched Tesla drop 20% on earnings. I've watched all of these large stocks, but not back to back. So it's pretty interesting in that regard. As far as the option activity, 3 orders for the day, totaling 513.27 thousand. Positive order value of 0%, so obviously not a lot of bullish activity for the day on SoFi stock, not really for the overall markets as well. And could be because of this. Maybe some people knew that Netflix was going to have bad earnings. That's kind of what it looks like when you tear things back and look at the data here. Now let's go ahead and look at SoFi stock and the max pain. 750 per share by the end of the week. That's kind of where the max pain is telling us that we could end. That would obviously be a slightly good move from where we are right now. We're only at about $7.35 per share, give or take. We're still in that important level where we could drop down to 5 or we could rip up to 10. Really only time will tell. But given what we're seeing out of Netflix, you're probably going to see another move to the downside, which is not what people want to hear. But that's the realistic truth. Now, I don't know exactly if that will happen. Obviously, things can develop pretty fast. But that's surely the way it looks right now. Leave your thoughts down below in the comment section as well. What do you think about Netflix at these prices? Is it a buy for you? Are you concerned for the company? Quite concerning for the overall consumer and the stock market, that's for sure. As far as the charts, again, the MACD is bearish. It was starting to curl back up and want to go positive, but after what we're seeing right now, it's probably not going to happen. The RSI is at 35.56, so that is way on the oversold side, way overdue for bounce. We might still get it. I want to be optimistic. If Fed Jerome Powell is not as hawkish as we expect, it's very possible we will get that bounce. But if he is pretty much meets our expectations, or if he is bearish, hawkish, then the markets will continue to come down. So that is pretty much it. Watch for $5 per share. Also watch for $10 per share if things do turn around. But overall, not a great sign. And it sucks I have to make this video and let you guys know that. But I want you guys to be prepared. If you guys have any trades, be very mindful of what happened last time with Netflix earnings. The markets did crater after that, to say the least. So that is going to be all for this video. Let me know if you guys hit the Netflix puts down below in the comment section. Thank you guys for watching. Hit the like button, subscribe to the channel, comment down below what is your thoughts about Netflix, comments, questions, or concerns with Sofi. Let me know how you guys are feeling down there. That's going to be all. Thank you guys. I will see you in the next one.